Okay, good afternoon, everybody. Let's go ahead and get started. Just want to welcome everybody here. I also want to give a shout out to those of you that are new with us in the program. I'm excited to have you guys here today for our basic training. Today, we're going to talk about Fibonacci and crowded market concepts. And I've been really excited to talk about this with you guys. This is one of the basic training videos that I've been looking forward to. Got a good plan for us today. Some of the stuff that you guys are going to learn are going to be really, really cool. So I'm really excited to share this with you guys. Um, let's do a quick mic check. If you guys can hear my audio and see my screen, just give me a little Y or a yes in the chat box just to let me know that it is indeed working. Like I said, hope everybody's doing well. Hopefully you enjoyed your Thanksgiving, enjoyed your time with your family. Um, and I'm excited to have a great week with you guys. So also as a reminder, we do have COT report data coming out this afternoon. Obviously, it's coming out late this week due to the Thanksgiving that we had last week. We will get access to the COT report that will come out today at 3:30 Eastern. So for me, that's at 1:30. So about 30 minutes after this call, we'll get access to that data. Please allow up to 1 hour after we receive the data to get the signals and for the scanner to update. You're welcome to be on the scanner during that hour. Just know that the scanner will be in kind of like a maintenance mode. It's not going to be completely updated. It may even look kind of funny as we're updating that data. So please allow up to an hour. And I think that'll be really, really good. We'll get those signals out today, and then you guys can go ahead and take those trades this afternoon. I would at least wait until Sydney opens, maybe even until Tokyo opens tonight to take those trades. So around the time that we go to the webinar, we have a live trading tonight at 8 p.m. Eastern, where we're going to discuss the shifts for the week. We're going to discuss the top trade call outs for the week based off the COT report and the sentiment index. And so in that call, that'll be very informative to kind of get an idea of what kind of trades we're going to be looking for the week. And that'll be a good webinar. So, all right, guys, well, let's go ahead and jump into this. Before we jump into Fibonacci's and crowded market concepts, as always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. Well, let's jump into this, guys. So let's talk about, I'd like to spend about 25 minutes on Fibonacci's, and then I want to spend 25 minutes on crowded markets, or however long we need. If we need less, we'll go less. If we need more, we'll go more. Hopefully, my plan is to keep the webinar less than an hour. So 45 minutes to an hour is how long we'll go. But let's start with Fibonacci. So I realized the other day I was thinking about what do I talk about in the webinar on basic training next week, and I realized I haven't done a video on Fibonacci's, and it's so important. So I thought we would do a video on Fibonacci's. So let's kind of talk about some of the basic Fibonacci's, like what a Fibonacci is, and then we'll use a live chart to throw a Fibonacci on your like on an actual live chart. So first of all, Fibonacci. I don't know, I'll be honest, I don't know the whole history behind the Fibonacci's. I learned it once like many years ago and then I've kind of forgotten. But basically, Fibonacci's are a sequence. It's a sequence of numbers. And it's said that Fibonacci is a sequence that is found all throughout the universe. Like it's in they use it in engineering, they use it in math and science, it's used in art uses Fibonacci. It's found in how like animals, and it's found in humans. Like it's a sequence of things with um, of patterns and how things play out over time. So let me actually show you what a Fibonacci retracement is, and I'll show you kind of what those sequences look like.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code friend of Steve, that's friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So a Fibonacci sequence, what you do is if you want to draw one out, you'll draw one from like the bottom of if you're drawing an uptrend, you'll draw it from the bottom of the uptrend up to the top of the trend. And this is what a Fibonacci looks like. And so you have these retracement levels. And so you have 0 to 100. So this is 0 up here and 100's down here. So if something were if the market were to retrace, it would retrace how much of 100%. That's what we're talking about. So 0 is up here. This is a significant level right here. It's 0.236. Okay, that's a Fibonacci retracement. A 0.236 is a Fibonacci retracement. And that's the first major level in Fibonacci, okay, is 0.236. The next level is 0.382, and that's a 0.382% of 100% retracement of this move. So that's what a Fibonacci retracement actually does, is it says, okay, of this move, you're retracing back what percentage of this move. And so often the market likes to navigate between one level and another level. It'll go from 23.6 down to 38.2, maybe come back up, go back to 0, maybe it'll go back down a little bit more. It's said that the golden ratio, you can look this up on YouTube, other places, a lot of people say that the golden ratio in in uh, the Fibonacci sequence is between 0.5 and 0.618 right here. So a lot of retracements, if you can get a market pull back into between 0.5 and 0.618, that's kind of like your golden place to see if you can get a market move back to here. And then it goes down to, what is that, 0.86? Let's see, I forgot what's this level called. It's called, 0.786 is the next Fibonacci sequence. Then you have 1. And then it kind of gets interesting. You actually have Fibonacci sequence that comes all the way down to here. You have 1.618. This is basically 1.618 of 100% of this move. So this is 100% between here and here. That's 100%. And then 1.618 is 1.618%, or it's technically 100.618% of this move. Then you have 2.618, then you have all the way down here 3.618, 4.236. So a lot of things, like I said, a lot of things in nature are actually built Um, like the way like our bodies are built, like from our feet all the way to our head, a lot of things are built off of Fibonacci sequences, which is really interesting. In fact, your face itself is built like off of a Fibonacci sequence, from your forehead down to your eyes, into your nose and your lips and your chin. Really interesting stuff. Um, it's all a Fibonacci sequence. Um, and in trading, often things like to work this way. So this is a Fibonacci. Let's actually find a pullback in the Fibonacci. So when you're drawing Fibonacci's, the correct way to draw them in trading is to take the a apex low to apex high, or an apex high to apex low is the best way to draw them. You don't want to just draw them. I mean, a lot of people will draw them wherever. I think you do need to have a science to how you draw them. Like you don't want to just say, I'm just going to pick this low right here to this high, and we'll call that a sequence. I don't think that's good enough. I do think you need to be a little bit more specific with which ones you're going off of. Like right here, I would probably go off of something like this. Like this is a sequence. Here's an apex high up here, and then here's an apex low. So we went from low to high, and then here's your Fibonacci. So notice how the market made an apex low right here. Let's actually circle that. So you have a low right here, and then you have a high up here. Then this market, look what it did. It pulled back, went to the 23.6. That's a common place to go and then come back down. It actually came up to the 3.2, 3.82, paused for a second, came back up. This one pretty much blew through the 0.5 and the 0.618. Went in between 0.618 and 0.786 and then pulled back, retested where the 0.236 is, and then started coming back up. You can notice right here, it made resistance around the 0.618 line, right? Made resistance multiple times and then started pulling back from there. So there you go. There's a Fibonacci sequence. So you want to do it. You want to draw these out. If they're helpful in finding support resistant zones, there's a couple of strategies you can use, like if you're just trading Fibonacci's, like retracements. I can show you a couple of those that are pretty neat. Let's see. Let's do, again, if you're going to draw one of these out, I'm just pulling up a random chart here. Again, the way to do this is go from apex low to apex high. So this is one right here. Here's apex low. Here's apex high. There you go right there. This one pulled back to the 23.6. Okay. Came back up, came back down to the 23.6, came back up, and then it was off to the races from there. It never went below the 23.6. So again, when you're doing this, make sure you're doing it from low to high. I'd actually do it. This is not bad. Here's a low to high. That's not bad. This one came right down to this, pulled back all the way down to the 0.5, started coming back up, came back down to the 0.38, and then went up from there. Very interesting stuff. Now, I'm going to show you guys another. So this is one Fibonacci. That's probably the most common Fibonacci tool to use. It's called the Fibonacci retracement. You can find it on TradingView. If you go over here to like on TradingView, come down just a couple in your toolbar on the left, and you've got the retracement tool. You also have Fibonacci trend-based Fibonacci extensions. I've used those. Those are kind of nice. You got Fibonacci channels, Fibonacci time zones, Fibonacci resistance fan, trend-based Fibonacci time frame. Oh, I can show you that one. The one I like to use is this one right here when I'm measuring time. So a lot of people don't know this. Maybe this is the first time you've ever seen this, but let me show you this. This is very, very powerful because Fibonacci's don't just work on a y-axis as far as like retracements go. They also work on the x-axis too. And a lot of people don't know that. So if you, I actually need to heart this right here. Let me start this. So let's do a Fibonacci time zone. So what I like to do is use a Fibonacci time zone. So again, same thing like I just did like with the Fibonacci retracement. So here's the apex high to apex low. that's an appropriate way to use a Fibonacci retracement. You can also use a Fibonacci time zone. So the way you do this is you start from the apex high to apex low, and now you have a time zone. And this will often tell you where reversals are about to come. So like right here is does this tell you? No, it doesn't tell me. This would be um, like 100%, 0 to 100. Then you've got this next one. This one didn't make a huge reversal there. It actually continued. Let's see, this one, I don't know if that's a reversal there. This one actually continued. This is probably not your best example of a Fibonacci, but it's a lot of the times breakouts will occur when like a breakout or a reversal will occur when when you use a Fibonacci time zone, or if you're hitting a Fibonacci retracement level at the same time that you hit a Fibonacci time zone, then there's a good chance that you'll get a reversal right there. So that's one of the ways you can use this. Let me show you another example. Let's delete this one. Let's just look at the time zone because I want to show you guys how powerful this can be. So let's just pick let's do apex low to apex high type of thing again. Um, yeah, let's start over here. So you've got this one, here's a high to a low right here. So, yep, right here. So this one made a high here, made a low here, basically made a low right in here, reversed right here, made a low, then reversed soon after, right here, made a high, and then reversed after. This one was more of a continuation. Like this one did not reverse. So it's like I said, it's not perfect. Let's see, right here it did reverse right there. Let's see if we continue on. This one not long after made a nice move to the downside. And that's where we are now. The next one on that sequence would be, yeah, I don't even know where that is. You can actually use this on a shorter term level too. Let me actually pull up the time zone again. Let's go ahead and show you how to use this on, like, again, you can just use apex low to apex high. And it doesn't even need to be that long term either. But let's try this one right here. So this is a good apex high. Here's an apex low. Let's see, are we getting some consistency with that? Let's see. Yeah, this was pretty close to a low right there. This was pretty close. Yep, low right there. This made a high actually, or not a high, but paused right there, and just right after that continued on with a big breakout right here. Nice, made a nice little low right there. This one made a little bit of a high right there, and then pulled back a little, and then went up from there. And let's see, any others? Yeah, and then it kind of fades out. So as time goes on, it's not as consistent as in the beginning, but you can kind of see kind of cool to see that in action. Let me show you. You don't have to go like you can thin this out too. Like let's zoom in a little bit. Like let's just go off of like this one from this low to this high. Like this will work just fine. Um, yeah, this got pretty close to a low right there. This one didn't do much right there. Um, yeah, that's a pretty good low right there. Made a little high there. But again, I wouldn't use this as a standalone. I think it's pretty clear that this is not a great standalone indicator. I think it's better used if you can combine Fibonacci time zones um, with another indicator. Like you don't want to use this just by itself. Okay. Otherwise, you will get frustrated with it. I can tell you right now, you will. I would too. Um, but I just want to indicate like, okay, let's do right here from this one to this one. Yeah, this is not too bad. Yeah, that got you pretty close to a low. So imagine this. Let's say you pull up a Fibonacci time zone. Okay. You pick an apex low to apex high or apex high to apex low. Doesn't matter. And let's say you get to a major support or structure or some kind of supplier demand zone, and you hit a Fibonacci sequence on Fibonacci time on the Fibonacci time indicator. Well, there's a good chance that's going to create some kind of breakout right there. But like if you're not like if you hit a Fibonacci time zone in the off hours of the day, let's say it's in the middle of the afternoon, and you're really not at a supply or demand zone that's significant, then I wouldn't expect this to have any significance at all. But let's say you pull up one of these on like an hourly chart and you are trading and it's the start of the London Open and you hit a major supplier demand zone. At the same time, you hit a Fibonacci sequence, then there's a really, really freaking good chance you're going to get a massive breakout around that time. Okay. That's the way I want you to use this. So let's use this on a smaller time frame. Let's actually go down to even like a 5 minute chart. Okay, let's pull up something like I don't know, like the euro. Okay, that's a pretty common thing to trade. Let's pull this up around a time of a major breakout. Okay. And let's just say we only trade during London. So let's use that like that the sessions indicator, which is pretty good. Let's pull up sessions and let's just do New York only. Let's say we only trade New York. This is like if you're a scalper. Again, I want to show you how you would use this if you're a scalper. So you would come in here and you can see the red area is New York. Here is a apex high to apex low. So you'd set it up like this and you would wait until like the next day if you hit this around the time of the New York Open, like right here. There was actually a pretty solid breakout around this time. It just never really played out like as a reversal. That I could see that one being useful. It didn't really play out as a reversal though. Let's see if we can find another one. Oh, that's perfect. That's literally what you're looking for. Came down into a demand area right in here and then took off from there. That's perfect. Um, let's try to find another one. Let's go ahead and delete everything. Let's go back even further. Let's find an apex high to apex low. Yeah, let's just go off of like this one right here. So apex high to low, um, right here. Actually, yeah, we'll go right here. There we go. So there's your high up here. There's your low down here. And let's see, we don't want to trade during, I mean, this did have a nice reversal right there, but we want to trade mostly around like in the New York session. So right here, this does pull back. Right at that pullback was a perfect entry to buy. See what I'm saying? So if you set this up on a 5 minute chart, you can use the Fibonacci time zone, just pick some of the bigger moves, go off of apex, high, apex, low. And then when you get to another New York session and you happen to have a Fibonacci time zone that a sequence that hits in the middle of the session, and you hit it like it's like I said, a demand or supply zone, really good chance you'll get some kind of pop out of there. Okay. So this is very, very useful. Like right there, that did indeed pop. Let's see if we can find another one. Yeah, right here. Here's one right in the middle of the New York session. See what I just did? So you're setting this up on a lower time frame. Ignore all the ones in between because you're not trading in there. Plus, these are the doldrums of the slower hours, so you don't want to really trade that. You want to find it when it's in prime time trading, Fibonacci time zone, lower, do a 15 minute chart type of thing. And then if you hit a supply or demand zone, at the same time that the fib sequence is indicating that it's about time for a reversal, go in, strike. Like that's a great way to use this. Let's see if we can find another one. Yeah, the next one's not for a while. So that was really good. That was actually a really good way to use this. And you could set this up like TradingView lets you, oh, let me redo that. TradingView actually lets you um, set this up on multiple currency pairs, and then you could come back later and um, and your settings will still be there. So it's not like it'll delete when you go away, which is kind of nice. Let's do another one. Like let's find a good solid apex low to apex high type of thing. Yeah, like Yeah, I'll go off this. This works. So here's the middle of the session right here. Here's an apex high. Here's an apex low. Again, I like to ignore everything outside of the session. Actually, during the session, you had a couple of places where you could have used it, but I like to find, um, okay, this one's just before the session starts. Nice little reversal there. You had a nice little one right after the session right there. There we go. This is what I was looking for. Here's one in the middle of the session. Boom. Nice reversal towards the end of the day. Smooth pips right there. You could make some pips just selling that off right there. Let's see. Can we find another one? Not in the session. No, they get kind of further out as you go. So, um, but that's what I like to do. Like if you're going to trade this as a session indicator, this can be very, very useful. Okay, let's see if we can find another Apex. Oh, wow, this is a huge news event, but let's use it. Let's try using it. So let's do, here's an Apex low from the news event. Here's an Apex high. And let's see if we can find something in session. A little while. No, looks like we're not going to get one. Okay, that's fine. So now you don't have to worry about that if you're trading this on the higher time frame. If you're trading this on the higher time frame, it'll practically just put you in the right direction, um, because you're on a higher time frame. You don't have to worry about afternoon doldrums as much. I'm just trying to show you that if you're going to use this on like a lower time frame, you have to ignore the out of session stuff and only trade it when it's in session. Let's try to find one last one. Okay, here's a good one that's in session. So you got a nice apex high in session. Here's an apex low also in session. Then we come over here and see what we can find. So this is kind of nice. So the next day you actually have a sequence that hits right here. Right after that sequence, you do have a nice breakout. Looks like it makes just a little peak right there, peaks out and then falls off, um, for the next couple of hours right there. Let's try to find another one. Wow, geez. This one's in session right here. Makes a low right there. And for the next like several hours for the rest of the session, it just pretty much navigates up. Um, and then that's pretty much it, like for the rest of the session. But so they can be pretty useful. I just want to show you that. Again, if you're going to use that for a smaller time frame, make sure you're trading in sessions. Try not to look for reversals out of sessions. Needs to be in when the market's moving. Let's go to higher time frame. You don't have to worry about that as much. This one, you're just more just picking apex highs and apex lows. Let's do that again over here. I'll just show you a few more examples. So like right here would be fine. You can just take, okay, from this high to this low, that's fine. Um, that works just fine. Um, and yeah, this is pretty good actually. Like this is not bad. You've got a high here, a very obvious low right here. Then right after, you get a sequence that hits right there. Not long after that, that pulls back. It does go back up, but it does pull back right there. Right here, this is perfect. Hits just perfectly right there. Hits a support level, hits some kind of demand right there, and then it's off to the races. Right here, hits some kind of divot right there, and then goes up. This one's a blunder. This one just, I mean, it did break out pretty quickly. Like, it didn't really reverse right here, even though that would be kind of the expectation. But it did break out. I'll give it that, but no reversal. Let's see if we can get another one. This one's perfect. Wow. This is perfect. Right there. Buy right there. Off to the races. So, yeah, like I said, it can be very, very powerful, but it's not the best use as a standalone indicator, as you can see. It's very useful if you can combine it with like a Fibonacci retracement, um, or if you can use your other technical skills to find supply and demand zones at the same time that you're looking for, um, find supply and demand in conjunction with this indicator. Very, very useful. Okay, so any questions on this so far? Because we're probably going to start to transition into crowded market concepts, which I'm really excited to talk about as well. But I just wanted to share that with you guys. You can also use, there's other Fibonacci's that you can use, like a Fibonacci resistance fan. Let me show you this. So you can actually go from apex low to apex high again. So pick that right here. And this is kind of nice because this will show you where the trend lines often form, which is really kind of cool, actually. So the way you use this one is you just go from apex low to apex high. Um, basically where a trend starts to where it ends is a great way to use it. And then, um, and it could either be an uptrend or downtrend, doesn't matter. And this one happens to follow almost exactly right here. It follows this right here, follows it right here. Not bad. Then it breaks apart right here, makes a resistance, uses it as resistance right there. Um, uses it as resistance right here, as you can see. And that's where the market is now. So that's a fun tool. I don't use that one as often, but if you want to play around with the Fibonacci fan, that's how you use it. Another one I'll show you real quick, and then we'll move out of here unless you guys have other questions. If you're looking for another time indicator, use this Fibonacci trend-based Fibonacci. So this one's kind of cool. The way you use this one is you go from a low or a high to low, and then you set it up like this. So basically what you're doing is you're picking an apex high to low and then also another apex high. So it's kind of different. And I don't like this one as much, but it has some consistencies to it. Like you'll notice that around a lot of these, like right here, there was a reversal that took place right there. There was a reversal that took place right here. This one, not so much, but yeah, definitely right here. You had a nice reversal. Little bit of one right here going on. You had another one right here. Yeah, I mean, it's okay. I don't use that one as much. I like just the regular time-based Fibonacci. And I like to throw them on my charts on an hourly time frame on lots of currency pairs that I trade. And then I just wait to see if I can get, you know, if I can get confirmation around a sequence. All right, guys. So I don't see any questions on Fibonacci's for now. If you have them later, feel free to ask them later. That's totally fine. But let's move on to crowded markets. So I have some really cool things I'm wanting to share with you guys. I have put together an indicator that's going to go on the scanner. It's actually going to replace this breakout indicator because I do think it's a far superior indicator. We're gonna call it the crowded market indicator. So basically, oh, looks like sentiment's having an issue right now. That's okay. I think it's just the afternoon. We'll get that fixed. Um, but we're gonna get let me refresh it and see if that fixes it right there. There we go. Got him fixed. Okay. It just needed to be refreshed. There we go. So right here, breakout indicator. This has been somewhat useful for scalping, but I've been wanting to make the scanner very much a swing trading, like a swing trading style of like the best scanner you could possibly find on the internet for swing trading. So this is going to have a 1 out of 5 stars, and it's going to be your crowded market indicator. So basically what the crowded market concept is, it's basically this. So trying to maybe I could do this on a whiteboard or something. I'm trying to think of the best way to explain it. So let's actually go look at the journal. Let's look at the let's go to trying to think of where I want to do this. Let me refresh this journal. Okay, so um maybe I'll do it here. I'm trying to think. Actually, let's do this. So I've explained this before with sentiment. So when you guys filter sentiment here on the scanner, notice how when you filter this, it brings to the very top the most long currencies. an overbought currencies float to the top. And then when you filter it the other way, the most sold off currencies float to the top here. When a currency pair gets to a crowded market, what this basically means is you have a bunch of retail traders buying into one currency or selling into another currency. When they get to a breaking point, this for retail sentiment, this is usually around like when it gets to like 95%, when you start to get to like 92%, 93, 94, that's what we call a crowded market. So when you have traders that are so biased in one direction, there's no more space for them to go short anymore because, or to go long, because if they're all going long and 95% of them are long, there's really no more people going that direction. So the market has no choice but to go the other way. That does not manage, um, that does not manifest itself as well with retail sentiment as it does with the COT report. So with the COT report, one of the things we're going to add that you guys are going to absolutely love is the crowded market indicator. And what this will do is it will show you, based off of uh, the COT report, when non-commercials get to a breaking point, which is the large speculators, when the non-commercials have too big of a position on like the euro and let's say they're super long on the euro, and let's say, on the yen, they're super short. And when those two get so expanded and when they're so opposite of each other, the market has no choice but to go the other way. Okay. So when you expand a rubber band, once you've expanded it so far, it then has no other choice but to come back in. Okay. And that can be caused by just people buying up more Japanese yen, or that could be caused by them selling off euros, or a combination of the two. But it has no choice but to expand or to implode backwards. Okay. So when a market gets crowded and we get indications that we are indeed at a crowded market phase, it has no choice but to start to reverse the other direction. Okay. This is going to be used as more of a longer term signal, but it's very, very powerful, especially when you look at it from a longer term perspective. So, so let me give you an example. So over the last several weeks, about the middle of October, I got an alert that the dollar yen was at a crowded market phase. So what this means is, in fact, if you look at the COT report, let's look at it. So you'll notice, I actually don't have the dollar on here. I have it on leverage funds, but the dollar was extremely bought up. And you'll notice here on the yen, it's extremely sold off. There's 158,000 contracts short on the yen to 27,000 contracts long. So very, very biased to the short side, and for good reason. Like the yen has been going down a lot. Um, and so you don't want to just go against them because that's what they're doing. You want to go against them when you know that the other currency is also crowded and gets to kind of a breaking point. And once they both are at breaking points, then it's time to start looking for reversals, because a reversal is most likely on the horizon. Okay, so I actually put this together, and we're going to start to launch this pretty soon here on the scanner. That hopefully this is done. I mean, it's already done. I just need to. I I was going to put it on the scanner tonight, but I wanted to make sure that the data gets on to the scanner correctly in about an hour. And once it's on the scanner, once the data gets onto the scanner today, then this will get added to the scanner later tonight. So this will be exciting. I haven't told anybody about this yet, so you guys are the first to hear about it. I'm excited to put this on there. But yeah, so you look at this. So you've got right now the most crowded market is the euro yen. So there's lots of buys on the euro right now. You can see that 66% of all non-commercial data, this is your large speculators, are long on the euro as of right now. We'll get new data in about an hour. And the yen has 85%. That's pretty substantial, right? Like there's nothing that long right now, uh, as far as major currencies go. nothing that long and nothing that short. So it's at kind of like this breaking point. So when it gets to that point where that differential is so large, you don't want to look to go long anymore on the euro yen. You want to actually look to go short. So this takes some logic that you don't really think about necessarily. You have to kind of put the pieces together. So a short on the euro yen makes sense. And actually, if you look at the euro yen right now, well, today it's actually down 0.5%. It's kind of crazy. But you look at this from a higher time frame, look where it's been. So I don't know exactly when this got to crowded market phase. Um, I think in the last month or so, it's gotten to the crowded market phase. But basically, the long-term signal is to look for shorts now. It's no longer to look for buys. You don't want to look for buys when it's in crowded market phase. Um, and the idea is every time this thing comes up, you want to send it right back down. Comes up, sends it down. Comes up, send it down. Comes up right here, send it back down. And the expectation is that the euro yen will continue lower over the next little while. These signals won't change as often as like your shift trades go, because these will be longer term signals, and it's more like a what's going to happen over the next month, what's going to happen over the next couple of weeks. So currently the way the scanner is built is the sentiment and the shift signals are designed to tell you what's going to happen this week, which direction is the market going for the week. And then the crowded market signal and the long-term signal, which you'll see on the scanner soon, is going to give you what's going to happen or likely to happen over the next, we'll say, month to 3 months, which will help you kind of have a perspective, a little bit more of a broader perspective on what to expect. And this is highly accurate. Let me show you another example. So I got a signal on October 17th to sell the dollar yen. I got that signal right here. Let's go out a little bit more. So October 17th was right here. And I got an alert that said that the euro or the dollar yen was at crowded market phase. What that means is that the banks are so long on the dollar yen that they really can't get much more long. Okay, that's what crowded market means. It's just so the direction is so they're piled into a direction so heavily that there's really no choice but to go the other way. Okay, so I got that alert right here, and so what I did for the next month, basically, and I'm still doing this right now as we speak, is I've been looking to sell the dollar yen. So anytime the dollar yen comes up, like here, I just whack-a-mole, just play whack-a-mole every single time. Comes up right here, play whack-a-mole. Comes up again, play up some more whack-a-mole. Does it again, send it right back down. And every single time you have the permission to just go in there and start selling. Now, you do want to try to be specific with your entries. I wouldn't just go in there and just sell just because it says to sell. What this should tell you is that now is the time to really start thinking about looking for supply zones, because the chance of that supply zone working out is a lot more likely. Your RR ratio is going to improve heavily when you use that crowded market indicator on a higher time frame. So for example, on this one right now, the dollar yen is going to be a 5 out of 5 stars. So anytime we come up to supply, what's the expectation? You should sell anytime it comes up to supply. Okay, take profits at demand, but try to stay in these trades because the RRs are going to be really good. Now, why did it do this? Well, if you look at the higher time frame, let's go actually out to a daily. You can actually see that this is at a multi-year high right now, and it got to crowded market phase right here. That's when I got an indicator that you should start selling, is right there. And this, like I said, it's already off to the races. Um, let's pull up. That's a great question, Lee. Let's pull up this. Let's go ahead and pull this up. Um, the order blocks. There you go. There's an order block right now. There's your sell block on a daily chart telling you to sell right there. At the same time, the crowded market signal would have given you a 5 out of 5 stars. right there. And you're just playing whack-a-mole. Like I said, anytime that thing comes up, you've got permission to go ahead and start selling it with the banks, because the banks are going to have to start taking profits. Don't you think about it. They made all their money. What this is basically saying is they made all their money on the way up. Okay. So this thing was coming up and up and up and up because we know that they were buying the dollar and we know that they were selling the yen. So naturally, this pair is just going to go up as a result. And when they get to a point where their position is just so big, they have to take profits. What happens when you take profits on a long position? You sell. And when you have banks selling like that, anytime this thing goes up, they're going to try to fool retail traders into buying it. And they're going to use that as an opportunity to get out and sell off. It's just genius, guys. It's just beautiful. So that's going to be a huge thing. Like I'm telling you, as soon as I get that added to the scanner tonight, like there's no other scanner like it. Like at that point, it's the best. I can tell you right there. There's nothing like it. So there's that. And this has already come down. I'm kind of mad that we didn't get into more trades here because this thing is already coming down pretty hard on that dollar yen. Now, another one that's lining up right now, when you look at this indicator, this will start to show up on the scanner soon. But another one that's in crowded market phase that I've been eyeing is this Euro CAD. This Euro CAD has got a really long, the banks are really long on the Euro and they're really, really stinking short on the CAD right now. So again, what's the expectation? Is that over the next month to 2 months, maybe 3 months, is that the Euro CAD will actually start to experience a pullback. I can tell you right now that the Euro CAD will probably go down over the next 3 months. I'm not saying it'll go down today or this week. I mean, it probably will, but over the next month, 2 months, 3 months, that's what you would expect. And so you can kind of go on these little raids in the market. Like if you use this concept and you don't risk a ton of money and you're scaling into this, you can actually make like a pretty good return. Um, uh, waiting on that over a 2 or 3 month period. Let's go look at the Euro CAD. This one is just starting to crack right now. We're just starting to see the initial cracks here. This one's been going up and up and up and up. Naturally, you would expect that to go up and up and up over the last 4 or 5 months, right? It has been going up. We would expect that. That is the banks buying the Euro CAD. But now just recently, we got alerted that they're at crowded market stage. So they have to start taking profits on the Euro CAD now, or they're going to be taking profits if they haven't started already. It sure does appear that they have, though. This is pulled back just since the 21st, so just a few days ago. This pulled back from a high here, and it's already cracked. And it looks like we may even experience more cracks with this. So anytime this Euro CAD goes up to a supply zone, what do you think I'm doing? I'm selling it. Every single time it hits supply, I'm looking for sells. Does that mean every single supply zone is going to work? No. But if you manage your RR ratio correctly, like if this thing comes up to here, there's a good, we should probably sell if it comes up to there. That's a supply zone, and look for a good RR on the way down. If this thing busts through that and goes up to the next supply zone, what do you think I'm doing? Again, I'm going to be selling that with a good RR ratio around that supply zone and riding it down to there. So we can do that. I actually am down to place several crowded market signals in the Telegram chat, with very specific take profits and stop losses and entries. Just know that they're going to take a while to play out. But those can be really, really solid signals. Our ratios on these, I'll show you some examples.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Let me turn some of these off because they are confusing. So let's just go off of these ones. This is my favorite one. So those are two different supply zones right there. So I just have one order block indicator now up. So hopefully that doesn't make it as confusing anymore. So Phil, great question. What kind of RR are you thinking? So this is a supply zone in here. So let's go ahead and show you what this would look like. So you could have a trade just like this and have a limit order just sitting there, and you could ride this down into, in fact, we just talked about Fibonacci's, right? You could ride this down from this, let's see, let's do a retracement. You could write it down to there. That one gives you almost 3 to 1, 1 to 3. You could try to go down to the 50, and that would give you about a 4.5 to 1, or 1 to 4.5 right there. Another example would be if that one stops out, there's a really good chance we could get into a good trade right about here. That's a good place to have a limit order just waiting. And that would give you about a 1 to 4, 1 to 4, 1 to 5. Right here, this would give you about a 1 to 3.5. That's not bad either. So these are really, really good, solid trades. And once you get to crowd, you could place trades like this on every single crowded market signal. Okay. You're not going to have a ton, like in perspective, when you're trading this, like out of every currency, you'll have, let's see, these 3 are in crowded market stage. These 2, okay, yeah, actually there's probably like 7 or 8 of these that are in crowded market phase right now. The rest I would not touch as far as crowded market goes. The rest of them, they are either neutral or the signal is to continue to buy with the banks, or the signal is to continue to sell with the banks. So we'll give you a bank long-term signal, and we'll give you a bank crowded market signal, right? All right, guys. So this is exciting. Any other questions about this? This is going to be such a game changer, I'm telling you. Like we've got the benefits of the shift trades from the commercial data, because commercial data is your biggest market. And the reason why the commercial shift works is because when shift moves and makes a big move in the market, that typically cause a ripple effect in the market the following week. That's why shift is so beautiful with commercial data. But when you're using non-commercials, that's really nice to follow them over a longer term perspective. However, when non-commercial gets to a breaking point, you typically want to look for reversals. And that's what the crowded market signal is going to do. So this is just like everything is just coming together. This is exactly how I envisioned the scanner to be. Like everything in here, it's going to be just so lethal. I'm so super excited about it. All right, guys. I don't see any other questions, so we'll go ahead and wrap up. In about 40 minutes, I'll head into the scanner. I'll update the COT signals, and then within an hour after that, I'll send out my weekly report with the top signals for the week, and then you guys can go ahead and hop into those. Sometime, early evening, it would be a good time to get in. So, all right, guys. Well, appreciate your attendance today. Thank you for coming. Have a fantastic rest of your day, and we'll see you guys in the next webinar. Thanks for coming.